The national budget for the 2025-2026 financial year has been set at 72.3 trillion, representing an increase of 0.3% compared to the current financial year's budget of 72.1 trillion shillings. Presenting the budget highlights, Finance Minister Matia Kasaija announced that human capital development will receive the largest allocation at 11.4 trillion shillings, followed by governance and security at 9.8 trillion, while development plan implementation will receive 2.7 trillion shillings, among other sectors. In a bid to reduce reliance on external borrowing, government targets to collect 37.5 trillion in domestic revenue. Of this, 33.94 trillion is expected from tax revenues, 3.28 trillion from non-tax revenues, and 328.6 billion shillings from local government collections. However, meeting this target could prove challenging for the Uganda Revenue Authority, given persistent shortfalls in revenue collection in previous years. Approximately 27 trillion of the projected revenue will go towards debt repayment, leaving limited fiscal space to fund other priorities in the budget. To bridge the gap, government plans to raise an additional 11.3 trillion through domestic borrowing and about 2 trillion from grants and external budget support and 11.3 trillion through external project financing, including 2.8 trillion in grants.
Government has stepped up efforts to mobilize domestic revenue. Going forward, emphasis will be put on the following. 1. Broadening the tax base through strategic investment in the opportunities in agro-industry, tourism, minerals, including oil and gas, science, technology, and innovation, including ICT, as well as interventions that support wealth creation and the growth of small and medium enterprises.
Uganda's public debt stock is projected to reach 116 trillion shillings by the end of June 2025, comprising 56.3 trillion in external debt and 59.7 trillion shillings in domestic debt. Despite growing concerns over rising debt levels, he reassured the public that the country's debt remains sustainable and not a cause for panic. Kasaija further emphasized that the economy remains resilient and is expected to grow by at least 7% in the 2025-2026 financial year, with a potential to reach double-digit growth when oil and gas production begins. The economy is projected to expand to 254.2 trillion, translating into a GDP per capita of $1,324, up from $1,263 in the current financial year ending 30th June 2025. According to the minister, inflation has continued to ease, falling to 3.4% in May 2025, down from 4.1% during the same period last year. Inflation is expected to remain below the Bank of Uganda's target of 5% per annum.
Our economy has strengthened its resilience to domestic and external shocks and is estimated to grow by 6.3% this financial year 24-25. This is after recording growth of 8.6% in the third quarter of this financial year.
Norbert Atkunda, NTV News.